So first, ladies always go first. So Mirna, if you don't mind telling us a little bit more about who you are and your story, and then we'll go with Khalid and Hussein at the end. Thank you.
Um, Hi, good evening, everyone, and thanks for having me today with you. My name is Miranda Slayman, and I'm the founder and CEO of Fintech Galaxy. We're an open innovation, open API platform that basically tries to empower the fintech ecosystem and connects financial institutions with innovators and startups. The company is 3 years old. I'm a mother of three kids, and I'm based in Dubai. The team is all over the place, in Lebanon, in Riyadh, in Egypt, in London. We're a pure virtual company and we don't go to offices at all.
Thank you. Khalid, if you don't mind telling us a little bit more about yourself and your amazing startup. Thank you, Mirna.
So, first of all, thank you very much, Startup Grind. My name is Khaled Hassoun. I'm the CEO and co-founder of Circles. And if you ask me what is the Circles, basically, Circles, it's a saving solution. We operate the ROSCA model, as we call it in the Arabic region or the MENA region, جمعية. We enable people to participate in a ROSCA or in a جمعية without knowing any members on them. And if someone has defaulted or stopped payment, basically, we will we will compensate that default and we will take or proceed with the legal action as per regulation. We are almost 5 years old from the start of the idea. We have we're blessed with the regulator license here in Saudi Arabia. We've been licensed last year in 2020, but we're operating since 2017.
Amazing. Hussein, if you don't mind, would you like to go next?
Yeah, sure. Thank you a lot, Damo, and thanks very much, Startup Grind, for organizing such an event. I'm very thrilled and very looking forward to such an event. My name is Hussein Al-Binawi. I'm one of the co-founders and also the CEO of CowPay, a startup based in Cairo, Egypt, working mainly in the payments field. What we're trying to do is to build the industry-focused solutions on top of digital payment infrastructure to help enable more traditional markets to go into the digital transformation space, enabling them to not only run their operations using digital elements, but also help them collect payments and increase their acceptance level using digital channels. The company is almost 1 year old. We're still new to the market. We're very optimistic about what we can do in the Egyptian market.
Amazing. So as everyone can all see, we have an amazing panelist here. And so I want to start out with the hard questions, the really hard ones, and then kind of go into more of the easier ones. So the hard one is around regulations. I heard regulations there. And so all of us, we live here in the MENA area, and we all know that regulations can be kind of a challenge. So I kind of want to understand your journey for your business to become regulated. If you're not in a business that doesn't need to be, regulated, then let someone else share. But I'm sure all of you have some stories about dealing with regulators, and what's been your journey like, and how did you kind of, tackle that challenge? Who wants to go first?
I will go first since I have a huge experience with the regulator since 5 years. First of all, if you are in a business that is not heavily regulated, so just launch and good luck with that, because businesses that has or let's say it's heavily regulated, you're gonna face a lot of challenges meeting those regulations because of many reasons. First of all, some regulations does not get updated accordingly, or some of the activities or let's say new innovations does not have regulation by itself.
Yeah.
So there is always that fear of regulation that always occurs, that you don't want to do something that's currently not regulated. However, if you do it, you're gonna be in a big trouble. So yeah, to solve such an issue, I do always suggest from our experience that going or initiating the talks early with regulators will help a lot, and providing with a solid example, solid data will provide them with a straightforward guideline to proceed further and take new initiative live to the markets.
That's the awkward silence when you talk about regulations, I guess.
Yeah, it is. It is.
Well, it was a mistake starting with
No
that.
one, no one wants to talk about it.
No, let me give my views on regulations. And anyways, مبروك إنه you have a license now after so much work. And I know إنه موضوع الجمعية we had a few experiences بمصر والبحرين on جمعية, and it's a very tricky one. It's one of the toughest to regulate actually, لأنه you're getting a group of people to collaborate on a platform where there's very little EKYC, but there's trust. We're all part of جمعية at some point in our lives, and it's always between friends. It's very hard to regulate such a market. But well done on that. نحن كفنتك Galaxy we're not regulated لأنه we are an enabler to the ecosystem. Even though we're borderline, to be honest, لأنه we're getting into the AISP kind of AISP open banking kind of world. And so far we're still working as an ecosystem enabler. We work closely with regulators. يعني يمكن we work with regulators more than the fintechs and startups themselves. We support fintechs in getting regulated and in understanding the regulatory environment. In our views, Bahrain is the most advanced when it comes to regulations and fintech regulations in terms of open banking. We see Saudi Arabia as the most aggressive, and I think that Saudi in a short period of time is gonna really excel. They're taking their sweet time, but it's gonna go much faster than any other market. My most favorite market is Egypt. لأنه I think Egypt has the scale, has the talent, has the breadth of really what a fintech needs to excel. The CBE is working hard on getting things regulated, but it's a very tough market كمان لأنه it's like saving the Titanic, it's such a huge market and it requires a lot of work from a regulatory perspective. But نحن we work closely with the regulators on a regular basis. We work closely with AMF كمان, and we have, for those who don't know, we have a regulatory chatbot on our website. It's called Hadi. I'm going to send you the link now on the chatbot. You can go in and actually read and search about any regulation that you need to know in terms of fintech. طبعا the material gets updated on a regular basis, but we wait for the regulators to give us the information. I hope you find it useful. That's it from our side. I know, Hussein, you have a lot to say about regulations as well.
Yes, as you said, Mirna, thank you very much for shedding some lights about the Egyptian ecosystem. We've made, I think, a great progress in terms of regulatory framework, especially for fintech startups. I was lucky enough to start my journey in startups and in fintech like 6 years ago. And the only rule that was there is that it's always better to ask for forgiveness than to ask for permission. It was the common sense when you're discussing regulations in Egypt to go do what you want. And then we will come back later and see how to regulate this. Now, after 5 years, I think we've been through a lot of progress. The Central Bank of Egypt, the government, and even the president have been exerting a lot of focus into regulating a lot of unregulated spaces. One of them is the financial sectors, enabling more of startups and private companies to cooperate with banks, to cooperate with the Central Bank of Egypt, to innovate in that space, to provide products, provide solutions for a lot of problems that we're facing day to day in Egypt. We have a very large population. Most of them are underbanked or unbanked at all. We have like millions of informal businesses, forming like 60 or 70% of informal economy that is as large as the formal economy. That had to stop at some point. So in the regulation space, especially in Egypt, I'm very optimistic. And this is very ironic. Egypt has been known that it's not as flexible as other markets in terms of adapting new innovations and adapting new mindsets in terms of how to regulate things. But I'm very optimistic with the situation right now in Egypt.
Very interesting. Hey, so I actually got dropped for like 20 seconds there. My internet went out, but I do want to kind of, I know we were talking a little bit about, regulations, and that oftentimes can be not the most exciting, but being in this region is actually one of the most important things you should be aware of, depending on where you're going into. But what I really want to, I guess, move towards is to ask everyone about, kind of your journey and why did you start the business that you started? So, why CalPay, why Circle, or why Fintech Galaxy? Just kind of want to understand your journey and really why did you start the startup? And really, how did you figure out that's the right startup for you?
Let me start on that. For us at CalPay, I had a previous experience in the payments landscape in Egypt. I co-founded a startup and then exited after a few years, and then spent a few years working in different sectors other than fintech. And then I got an opportunity to get introduced to a group of friends that they wanted to start something at the payment landscape. And when I went back to see how the landscape changed since I left the fintech space, I found a lot of more opportunities that popped up. I thought for a minute that the cake has been growing bigger, and the number of startups and number of companies serving these sectors are almost the same as I left it. So here was the opportunity. That's one thing. The second insight, and this is the main driver for us in CalPay, that most payment companies like to copycat some existing models in Silicon Valley or in Europe, and they try to localize the model to Egypt or to their local countries. For us in CalPay, I saw a bigger opportunity in solving local problems. We have most of the markets in Egypt are not even digitally enabled. Most of the businesses, they don't have any digital elements. They don't have websites, they don't have mobile apps, they don't have ERP systems. And here comes a challenge on how to introduce digital payment and financial solutions in an environment like this. And so we thought about, this is our call. This is a nice opportunity for us in CalPay. It's a bit of not very crowded area to start with. And we started to work on a sectoral approach, like targeting few sectors or few industries. And we go help them understand the model. And we build a very localized, very focused solution for this sector to help them, enable them digitally, and then enable them to accept cash and transact financially online. This is an overview about what we do in CalPay. I don't consider ourselves a fintech company. I don't consider Cowpay a fintech company. I always say we're a market development company. Our main competence is the hyper-local tendency into understanding a local problem, and then we build a solution on top of digital payment infrastructure to enable such markets.
Very nice. Khalid or Mirna? Your journey, your story.
Go on, let me go on this, Marna. First of all, very nice introduction, saying about Cowpay. And let me tell you about ourselves. As Hassan said, by the end of the day, there is a niche market, and there is always a tendency toward the new solutions. And from us, Jamia, or as I say, Rosca is not a new solution. Rosca has been there in a lot of countries from the east to the west. Believe me, it's available in India. They call it Chet Fund with the C, by the way, not with the S. It's available in Egypt, it's available in Lebanon, everywhere. However, these practices has not been digitized up to the new generations. So what we have done, we have found a niche market. We found a business model that people until today is operating, however, was in traditional methods. So since 2015, what we have done, we went to digitize the the process itself, and to reach a maturity, we have passed different business models. Literally, we pivoted 4 times until we have reached our model. Because when we started the app, we said we just want to digitize it and let the people manage it. We found down there it does not make money for us as a businessman today, not a charity. We found that okay, people are liking the solution, but that not considered an added value for them. So we took it next level. We added new packages, we added payments, we added the risk assessment until we reached to our current maturity. And during those pivots and changes in business model, we found growth. Uh, Last year, 2020, there is more than 100% growth from 2019 to 2020. That's why we stuck to our current business model where we offer people availability for circles and every month to join. And their only fees they're going to pay is the booking fees. So if they want to have to book the first term, it's going to be more expensive than the second one, and third going to be cheaper than fourth, and it goes in until end of the circle. So to sum it up, we the business model or the process itself is available since ages. We just took it from the traditional methods to the digital methods to cooperate with the current generations.
Okay. Mirna?
Um, really interesting stories I'm hearing today. Mine is a bit non-traditional. I was a financial journalist. Okay, so for 10 years I was working with Dow Jones, Wall Street Journal, Reuters, and I was always reporting on the regional financial markets, regulators talking about the market, why banks are not doing the right, they're not offering the right services, why asset management is not picking up nicely, why VCs are not investing right. And I kept reporting on this until I decided that, you know what, until I do something about it, nobody's going to do it. So I decided to set up this platform that actually solves the market problem, which is twofold. Number one, it connects the ecosystem that's totally disconnected. And as much as we hate to admit it, we are in a region that doesn't really enjoy collaboration. Like you will barely find, even banks, sometimes they want to listen to, the startups, and then they like the idea, they go and replicate it internally. they steal ideas. I hate to say that, but it's the truth. Sometimes regulators compete with the startups and with the innovators, and governments compete with the regulators. And another problem that the market was facing is fintech. Unless there is collaboration, cross-border collaboration, nobody can scale. Like banks won't be able to provide the services, and the fintechs cannot really grow because Egypt is not enough on its own, and Saudi is not enough on its own, and UAE is not enough. So somebody had to bring this glue together and try to find a way to force people to collaborate. So I wanted to have regulators collaborating. I want to have banks and fintechs collaborating, and I wanted to have fintechs and fintechs collaborating. It was a very interesting journey and very tough journey. We didn't raise any funding. I mean, we raised angel money, not more than $400,000, but we started making money from day one because we were really genuinely solving a problem. And alhamdulillah, now we doubled in 2020 our revenues from 2019, and we're going much bigger with one single vision, which is one API, 22 markets. That's our vision, and that's what we want to do. And we offer our we actually make money from banks and offer the platform for free to innovators and startups. So any startup can join the platform free of charge. They have a sandbox available to them with 300 APIs and 5 data sets from Bahrain, UAE, Saudi, Egypt, and Jordan. You can participate in challenges. You can participate in hackathons. You can pitch to banks. You don't have to pay a penny. You just go in, show off, win the deal, go make business, and don't worry about us. So this is our vision. And I think, because we truly are trying to solve a problem in the market, يعني ربنا عم يوفقنا. And what's important, after 10 years of understanding the market and the strengths and weaknesses in the market, I think we've managed to solve a very important problem that the market is facing. I encourage everybody to utilize the sandbox. It's right there for you.
Great. So I'm so glad you brought that up, because what I wanted to move towards was talking about product market fit. And so some entrepreneurs are just very lucky when they launch something and they find, the right fit. But it sounds like, which you may be in that category. You had industry experience. You were, industry experience in the sense of you were writing about it. You were immersed in it. Whereas Khaled, it sounds more like, you guys have had to pivot multiple times to figure out the right way forward. But oftentimes what entrepreneurs often should do more of is capture analytics. Let the data drive you. So instead of being a push, meaning your services, you're pushing it onto people are pulling it from you. So I kind of want to briefly talk about that journey for you all to figure out, one, are you using analytics to help make decisions on how to steer your business? Or two, are you just using your sheer gut, right? Which one is it?
Well, analytics is artificial intelligence, and I'm still in the school of human intelligence. We do use analytics a lot, and we do use data a lot, and we analyze, the activities in the sandbox and who's doing what and which markets. But to be honest, when you build a platform, you either have to drive the strategy from within, like we sit as a management or advisory board and we come up with a strategy, or we say, let's go to the market and let the market drive us. And we have decided to actually allow the market to drive us. And we've been evolving year over year and even quarter over quarter in our market offering based on what the market wants. Market fit is the only way that fintechs or startups in general can win. By the way, Khaled, ما بعرف أنا, you mentioned that you've pivoted, but I think you've just evolved. When you say pivot, it's like you wanted to do jam'iyya didn't work, you did something else. But I think you've wanted to do jam'iyya from day one. You just evolved with regulations, with the market, and you've maneuvered around, bottlenecks to find your way. Is it really pivoting, or is just being a smart, practical
It
entrepreneur?
is everything because what type of service that we wanted to provide. When we started Circles, our service or the product we wanted to provide is free Jamia. Everyone can do their own Jamia. Our added value is you can manage and track whatever happens in Jamia. And how we make money out of it, we use the marketing or the advertisement model where we're going to use or utilize these data for marketing purposes. And after running that model for almost a year or so, we found it's not making a penny or not making a very good money that covers our expenses for the first year. So that's why we pivoted that business model. So the product, the second product was, it's again, as you stated, it is around Jamia. It is Jamia by itself. But we said that no, let's make the second Jamia you make paid. The first one is free, charge. The second one is going to be paid. And we had to do more services, uh, such as having a contract, having our own support or customer support, help you in managing that circle by following up and all that. Again, it's around Jamia, but the product itself was different. So we found that it is actually was making money, but again, not covering that expenses, not cooperating with growth. And as our friends here state, we had to listen to customers, and customer wanted to say, I don't have people in Jamia around me. Or one funny comment I had previously that uh, my group of family has already started the Jamia itself, the circle. So I had to wait for a whole year until they finish and join the Jamia. So here where we found that the issue the people are facing is not finding trusted members. They're not finding circles at any time. They're forced to choose a certain month. They're forced to sometimes to join the circle just for the sake of their moms or their wives or whatever it is. So here is our added value where we now as circles we open circles on a monthly basis, and our added value and product became that we manage it, not you manage it. You pay our fees, we'll give you whatever slot do you want. You have a good credit score, you will be on board. You don't have a credit score, sorry, you're not trusted member, you're not on board. So again, it's all around Jameen. Again, as you stated, Merna. However, the type of services or products that was offered in 2015 or 2017 was something else than what we're operating at the meantime. Even with the regulator, by the way, we were tackling. However, now because we do accept money, we do accept money by accepting cards, by accepting Apple Pay, and all that. All the money comes through our bank's account. So now it's a different product. It does need the regulation, and here where Circle's position itself.
Definitely get that. Thank you for sharing that interesting story, the journey that you guys have taken to kind of get to where you are today. Let's kind of briefly jump to something a little different. So I know we talked about really, using analytics or using data to help drive your decisions on how to steer the business. So while that's important, the thing that's probably most important to every entrepreneur in this region or anywhere around the world is funding. How do you find capital? How do you get access to capital? And, as Miranda brought up earlier today, if you think about it, this is very small markets. The UAE is 11 million people, Saudi, what is it, 33, 34, 35 million, something like this. So the market size is still very small, right? So a lot of times funding it's correlated to the size of the market. So my question to you all is, whereas this is probably for Khalid and for Hussein, what are your words of wisdom? What is the journey you took to be able to get funding? I think you said earlier that you had a previous startup and you exited from that. But I guess what would be your advice for others who are trying to start their business to gain capital here in the region? Yeah.
Yeah. I think although in the MENA region and Egypt specifically, we still need to see some big improvements in terms of access to fund, especially in the early stage startups. However, I think there is a bigger issue here is that the maturity level of startups requiring to raise fund. I think Egypt is a dreamland for everyone who's serious about starting a new business. We have a lot of problems in every sector. We have a very large population. It's about finding the right local innovation model to start with. What is a pain in what sector, what product or service am I going to target these people with? And then we have a big missing misconception with a lot of startups, me included, maybe in early days, is that you need fund to keep moving. I think this is a fallacy here in the region. I think to prove a point, to build an MVP, to acquire a few customers, which are the main steps to be eligible for fund, you don't need any fund. You need very little money to start running some small experiments with small scale target audience. And if successful, I think you will be eligible 100% for funding, and you won't have any problem raising fund. Alhamdulillah, and not to brag about, I didn't have any problem raising fund throughout my journey in Cowpay or any other, because I always start from a point of validating my assumptions, validating there is a market, validating the product market fit, and then start looking for investment. So if I have to say an advice and note to self first, is that money and funding is the least of your concerns when you start to build a company. Maybe at a very, very later stage, it becomes an issue if you're a big company competing with another company in a crowded market or in a more mature market. But I think in the very early days of your startup, you have to neglect the inner voice that you need funding, that you need to get shown in publications, that you need to have big PR and shiny PR releases. You don't need that at all. You need to identify key elements of your market and your team and your product, and you don't have to show face to anyone except your team and your customers. So that's my take in the perspective of raising fund. However, as I mentioned earlier, we're still very behind in terms of accessing fund, especially in Egypt.
Mira, do you want to add to that?
Well, actually, I just love what Hussein said, and I come from a school that encourages bootstrapping. I think entrepreneurs, when they get hold of a lot of money, the production and productivity goes lower. The more it's challenging to stay afloat, the more effort you have to put in proving your business model, in winning clients, in creating networks and connections. This is where all the focus should go. And I mean, it's much easier to raise funds than to actually start making money. And burning cash is is very easy. You get tempted whenever you raise the first million, after the second million, you get tempted to expand your team and to pay yourself higher salaries and to sit on your back doing nothing and to really not see the opportunity. I'm Lebanese, and as you know, Lebanese live under pressure and they survive under pressure and they excel under pressure. And I only deliver excellence when I'm under pressure. The moment I have $1 extra in my account, I just go zone out. So I do like the fact that we followed the school of don't raise, you don't need that much. You actually need to focus on networking, on product development, on giving the market what it needs, on creating, you know, a brand and deliver what the market is looking for. And then when you're ready, you go and raise funds. Hella, having said that, unfortunately, investors are not that mature. And if you don't start raising from day one, they start raising questions and know, oh, you want me to come in at a very high valuation? Why? Because you're not giving me the opportunity to take 50% of your company at a $1 million valuation. Why do you want me to come and take 10% of your company at a $10 million valuation? You know what I mean? So the investor community actually comes to kind of basically they suffocate the investor rather than support him. The only group of investors who actually really support entrepreneurs are the angels. Because the angels put their heart and life and savings and they sit with you, they build with you, they support you, they advise you, they give you like time and effort, and with every dollar they put to actually help you grow. Whereas the moment you get into we call them the vultures, unless you're big enough, unless you're tough, unless you have a track record, unless you know what you're doing, you're going to be swallowed. So my advice to the entrepreneurs, avoid fundraising as much as you can. Stick to family and friends, and you know the 3 Fs?
Yeah, friends, family, and fools. But I don't like to call them fools. I like to call them believers. I like to call them the 2 Fs and a B, right? Because it's, you know, because they're believers. They believe in you, right? They're not fools. They just believe in it. But I want to add to this. Let's build on this real quick, because I'm glad you brought that up. A lot of people don't realize this.
And founders, look, somebody, sure. Well done, Dafir.
But yeah, I'm not every person I know equity in the business. So let's talk about this next big point, which is, you know, a lot of people want funding. They want to raise capital. What happens when you raise capital? What happens? I just want to get you guys' expertise. So you raise $400,000. What happens? Is it free money? You just can spend it on whatever you want? What happens?
I think this brings a bigger question of you as a startup, or you as a founder, or you as an entrepreneur. Do you know for sure why do you want money? I think you will be amazed on how many entrepreneurs do not have a clear answer for these questions. Either they don't know exactly what they want money for, or they don't know exactly when they need this money. So I think the whole story should add up. If you need money and if you got money, you have to know for sure what you're going to do with it. You have to know for sure what's gonna, like they say, move the needle. You're in a state right now, your investors expecting you to be in a 10x this place in such a short time. So unless you have a plan for this, an actual plan broken down is like, I will have to hire XYZ number of people. I will have to invest in those areas. I will have to pivot the product, enhance the product, and so on. This is how you start allocating the money. So it begins with a step of what do I need money for, and when do I need money, and then the whole story of allocating money should add up for itself. But if you're raising money just to raise money, And if you succeeded even to persuade some of believers, as you say, Damo, to give you money, the whole story will start to fall apart if you're not coming from a solid point of what I'm doing, what I need the money for, and so on.
Yeah. Sure. One of the other things, everything you just said, I wholeheartedly agree. One of the things that I want to add to that is, a lot of people don't realize that, once you take funding from someone else, you now work for them. No matter how you slice it and dice it, you are now their employee. So there become certain expectations are put on you from your investors, i.e. you have to report in certain time periods. You have to deliver whatever they ask for because they have given you money. You're indebted to them. Regardless if you do a safe or a fair or any other type of debt instrument, it's still a debt instrument. And I think that's the biggest misconception that most entrepreneurs do not understand. You're not getting free money. Unless it's a grant. Other than that, you're taking, in essence, a loan that you have to pay back. Yeah. So I kind of want to.
I need to add.
Can I just want. Go ahead, Hassan.
Yeah, I'm adding a little point to what Damo is saying and connecting it. What I was mentioning earlier is that the level of certainty and the level of how sure you are as a startup founder about what do you need the money for and how is the allocation is going to go is directly related to the level of freedom you're going to have after you have your first round of investment. So if you're not sure 100% of what you're doing with the money, like Damo said, you will be working for the investor, listening to what they have to say, trying to achieve what they have in mind. You will have like a completely different agenda than what you started with.
I want to add something here actually to what is being discussed, and this is a very important firsthand experience. We put a lot of focus on raising funds, and there's a very important area that we keep ignoring, which is the fundamentals of running a business. And unfortunately, very few founders are actually capable of running a business. And running a business, like being a CEO, you need to, number one, set the culture for the company. And this culture follows your personal brand and personal culture. So your code of conduct, the way you deal with people, the way you deal with money, the way you have to be your own role model. So when I'm going out and spending, like, for example, I'll give you just a simple example. I don't drink alcohol, and I'm not willing to pay for anything related to alcohol. So my rule in the company, whenever we go out entertaining clients, if anybody orders any alcohol, I tell them bluntly, you pay for it. Even if it's the minister of مش عارفة, whatever, okay? I don't care. It's a cultural thing. So this is number one, very important. Number two, the legal structure of the company is very important. The first time I put a penny in the company, you know where I invested? I paid $22,000 to a legal company to set up the company. We had articles of association. We had advisory board contracts. We had a proper governance structure in place. Before we even had a company, I had to make sure that people know what they're getting themselves into, be it a client, be it a team, be it an advisor, and be it an investor, right? This is very important. The third important thing is your financials. You as a founder or an investor, you are a separate entity than being a CEO. So you as an investor or an owner of 80% of the company or 100% of the company, you are a separate entity as a human than the CEO who's actually running the business. You have to be having, mindset of an employee who actually reports to a founder or to a shareholder who is actually monitoring what you spend, where you spend, how much you spend. Don't assume that, it's my business and I can do anything, because eventually when you go do the fundraising, people are going to ask you, give me your financials, let me see. And if you're not clear, they will not invest in you. And if you start with a little $1 that is paid to your pet from the company money, you're gonna get to a moment where you're paying $1 million for your own house from your company, you know? And being an ex-journalist, I have seen, trust me when I tell you this, I have seen family conglomerates, and I'm not gonna name any, but I have in my mind like at least 7, 8 from this region who have transitioned from a family business into a listed company on the stock market with very little corporate governance, and they have failed miserably. Yes. Okay, so forget about the money, get your basics together and learn the business acumen, have the business acumen to actually manage HR, you're going to do everything, including being an office boy, printing and scanning and everything. There's no glory.
There's no glory in it. Now I want to build on this because I think we've touched a really good point. So, you know, to all the entrepreneurs, and to you three, how many businesses have you started before you found success? Or was this your first one and you were successful? Let's be honest.
I'll speak on this. For me, this is number 3. So basically, I ran multiple businesses. Some of them has failed miserably, where we found a very, very good experience happening from there. Because on running a businesses or being an entrepreneur, there is no loss. For me, I always say there is no loss. You either make a lot of profits and you become filthy rich, or you educate yourself and you equip yourself with the new knowledge that help you make a great success story for the next startup of the business.
Right. Did anyone else want to answer that question?
Well, Fintech Galaxy is my first company.
Wow. Way to go. Clap it up. That is rare. Yeah. Like, you know, it's very rare.
But I'll tell you the secret. Okay. I have rubbed shoulders with a lot of who's who, like the CEOs of banks, of companies, of VCs. When you wine and dine, okay, forget about the wine because I don't wine, but when you wine and dine with people like Fadi Ghandour you learn a lot, and you don't need to go into your own, you don't need to go into the problems yourself. When you learn from, that day I was having dinner with Dr. Nabil Koshak. You should know him, Khalid, from SVC. Yeah. When you sit with an investor who's actually running the largest fund in Saudi Arabia, billions and billions of dollars, and you're having a chat and he's telling you what he's looking to invest in a startup, like what he looks for in a startup. Once you learn it a thing or two, I don't need to go into so many exits and so many failures to learn stuff. If I sit and listen, if I learn from other people's mistakes and experience, I will get it right. And the second thing, if you're not after money, like if you're setting up a company to create wealth for a group of people, you're going to fail. If you're setting up a company to make a difference in your own little world, you're going to succeed. Because it requires a lot of passion. I mean, the amounts that I told myself, what the hell am I doing here? Why don't I go and get a job that pays me 200,000 dirhams and just run the shop? Is numerous. Okay. And the only way I picked up myself and I said, no, I'm going to do it, is that passion and drive. Otherwise, you'll just fail.
I kind of disagree with you, Verna, because of 2 reasons. First of all, humans is very complicated items comparing to, like, say, software or robots. So going from a business to another, you'll always have the trap of selecting bad investors, bad partners, founders, and bad employees. That's a challenge that you'll always find on a day-to-day basis. So I had experience in a business where it was booming, growing, everything is fine. But our day-to-day job now became more of managing our own stakeholders, our own investors. So Here we're now from my side, I'm becoming so picky. If you're an investor, you say, Wallah, okay, you got money pouring in. What else? What else you're pouring? What else you're adding as a value to the company? Because as you guys stated, raising fund it became more easier than ever nowadays. But do I need the money? Do I need your money? By the way, I might take other people's money, not your money. And and again, when you say raising fund, I take it. I know it's a raising fund, and I know it's a risk the investor is taking. But by the end of the day, it's a liability on us as a founders. So because you want to do your best to ensure that these funds are spent wisely. So picking up on people, or let's say ensuring that selecting the right bread on top of your cream does not really comes with experience such as your experience, Verna. But I can agree with what you said because there's a lot of people, a lot of leaders nowadays has their thoughts and have their times explained to everyone. So that's very good experience that you had with such as Dr. Nabil yesterday.
Yeah, so I want to jump in again. So, I definitely want to pull Hussein back into the conversation, of course. The question that I want to build on is something that I think one of you said, something about, you invested, I think it was $22,000 or something like this to get all your legal documentation set up. Or the other statement, something about, you spent all this quality time rubbing shoulders with exceptional individuals, right? So most entrepreneurs are not as fortunate as you, or that's just being blunt, right? So since they're not, right, what are do you have, or the entrepreneurs that are on the call, since you have achieved such success and you have started to build those relationships, so you have relationship capital, are you at a point now where you start taking on other people to mentor them and build other people up? What are you doing now to pass the torch forward?
Well, if you want me to say about that, because a lot of people talks to me and using my own private Twitter account or other social media accounts. So basically, I do love to inspire and help people to put them on the right track until they make money. If they make money and you are now a business, a solid business, now I will go to the consultation model where I'll help you growing up and making your own strategy. However, if you're not, I'm not part of your advisory board, put me as a consultant and pay me, please, on my time.
Hussein, what are
Okay,
your
I don't think like you, Khalid. Maybe you're right. Maybe you're right. I don't. It just doesn't come to mind to monetize the network that I have. Well, one of the things that we do a lot at Fintech Galaxy is we enable fintechs to have quality time with leaders when we have access to them. So we always invite CEOs and regulators. We do a lot of these on a regular basis. We invite them to come and have similar webinars that you're running now, Damo. So we try to put them in touch. The challenges and the hackathons and all of that is another way that we give back to society. We don't expect anything back from the winners. We give them business, they get the cash, they get the exposure. We're just there enabling everybody. And everybody on the Fintech Galaxy leadership team, we do our own mentorship. So we participate with Flat Six Labs. We work with, Startup Bootcamp on stuff, GIFC Hive. I mean, we're Fintech Egypt, Fintech Saudi. And this is how we give back. And I do understand that fintechs are, or entrepreneurs in general don't have the blessings that I had with the exposure. But honestly, I didn't inherit the exposure. Like nobody said, come take this Rolodex and start calling calling Tom, Dick, and Harry. I built those. I built this network, and one day we were actually going through the database of Fintech Galaxy, and I found the details of Jack Ma, and I was like, where did I get his details? And I remember that actually I when I was a journalist, I reported at Davos, and then I thought, okay, Davos, the who's who was there. So let me go back to my records, and I found, I mean, you have no idea what I found. And whenever a fintech comes to me and says, do you know this guy? Do you know that guy? Then I go and search and I do the connection without expecting anything in return. So I do know that this, I'm probably lucky that I have the network, but we make this available to others. I'll tell you something that I have learned over the years.
Yeah.
People, there's one reality that people have to understand and they have to learn. Building relationships actually work when you don't need them.
Agreed. That's how I feel about funding.
When you come to me, when you call me, let's have coffee. I want to learn from you. I want to get to know what you do. I want to help you. I want you to help me. I like that. If you call me and say, do you know, like Khalid Hassoun, can you do an intro? I will do that, but then I will think, okay, no, you only call me for favors. So what I'm trying to say here is, if you are an entrepreneur and you know that you're going into the funding business, get to know the people who play in the funding business, get to know the regulators, get to know the banks, and get to know the investors, and get to know the stakeholders before you need them. Try to build relationships, invite them for coffee. Don't ask for anything, just invite them for coffee, sit, understand their story, tell them, understand what makes them tick. It's always give and take, right? Know what's good for them, what's valuable for them. And when you need them, you already have established the relationship. Don't wait until you need people and then go and ask for favors, right? So when you and when you go to events, go find the chief digital officer, get to know him, have coffee with him. Maybe one day he's gonna be your door opener. Don't just go and get full of yourself. And I mean, just go and introduce yourself. Do that.
Totally true. I agree with you, Mirna. Regarding the events point,
I need to give Hussein an opportunity to share some of his thoughts as well.
Go ahead, Hussein. Sorry, very sorry.
I have a slightly different opinion than Khalid and Mirna. I have been not a big fan of the word mentor and mentorship, especially here in the region. And I want to distinguish between mentorship and networking. I think all of the engagements that are happening all over the region, either a panel discussion, events, summits, are all good places to grow your network. This is not a mentorship. Mentorship, for it to count, it has to be built over time. You have to invest time, you as an entrepreneur and also the mentor, into breaking down what you need as an entrepreneur or as a startup, and how the mentor can help in this journey. And it has to be spread over time for at least a year to count as a mentor or a mentorship. I try to do a lot of this. I try to focus on one or two people where I can invest money on a regular basis. Like, for example, I bought a resolution at the end of 2020 that I will gonna help Circles and Fintech Galaxy. So I'm gonna invest a day or an hour or 10 hours a week, meeting with Mirna, meeting with Khalid, discussing in details what the business needs, putting actions for the next time we meet. For me, this is mentorship. Other than that, like going to some experts and having coffee, having dinner, sharing thoughts, exchanging business cards, it's a good start or a good channel to formulate a personal network or a professional network. So I don't see a lot of mentors. I don't see a lot of mentorship here in the region. And I think this is an area where a lot of innovation can come and play a role into finding a formula for how long can a mentorship relationship go between a mentor and a mentee. This is one point. Second point is I don't see a lot of so-called mentors as really qualified and eligible to give mentorship. Business executives, C-level corporate executives, sometimes employees are not considered as mentors. For a mentor to be called that and to be eligible and to be validated to give advice and give mentorship, he has to been through a journey a bit similar to what you are going through as a startup. So you have to find someone who has a technical know-how, but also an entrepreneur who has built something and succeeded, or built something and failed. So this is my take about the mentorship and giving back to another people.
Amazing, amazing. Well, I think at the very core, I think the reason why we're all on this call today is to really talk about, fintech, and we're all in the fintech space, and we all recognize that probably for the rest of our lives, financial services will be here. It's not going away in some form or fashion. And so, fintech is financial technologies, and you guys are all working in innovative space, i.e. you're not necessarily reinventing the wheel, you're taking the existing wheel and making it better, you're improving upon it. And so, with that being said, you're all are in different parts of the MENA. And so one of the biggest things that we're trying to do with Startup Grind is not only inspire, educate, but also connect. And so the last question I want to ask before we, open the floor to people who have questions is, what are the steps that we can take from this call so that we can start to better collaborate together, so we can better connect each other, to better support each other? What do you think?
I want to start on this question because I was honored to be the Cairo chapter director of Startup Grind Cairo during 2018 and 2019, along with my colleague Farouk Hassan. And one interesting approach that we were trying to push towards, and I think this is going to be my advice, is that we have to build a community, even a small community, to keep in touch after every event. Yeah. Startup Grind is very interesting. We have a monthly event. This is very hard to put out. This is very hard to keep it consistent. But I think that the most amazing takeout is that when people come and meet and share experiences, for these experiences to count and to build into something bigger, it will have to be consistent, not only through meetings or through events. So my advice to you, Damo, and to me, and to all startup grinders, is to try to build a forum, a channel, to keep all the audience and speakers and chapter directors and team in touch, help build up the conversation into a more solid outcome, not only during the events.
Amazing. Anyone else?
So to compensate on what you have said, and thank you very much. It's a very solid point what you have mentioned. Startups or today entrepreneurs need to be more connected through different platforms. You have to be available on multiple platforms. You have to be in Fintech Galaxy, Startup Grind, and all of that. Why? Because by the end of the day, you never know the next innovator or the next big thing, where is he going or when he is going. So being part of LinkedIn group, for example, or whatever group or a network that said you have to invite me, by the way, to that. You're gonna be listening to experiences from different products from different entrepreneurs, different perspectives, by the way, that might help you out to scale your business, or collaborate with someone else, or you might just guys, both of you, close your businesses and join to make a new business. So that's my comment. Always ensure that be part of the startup ecosystem and community to get the latest update and be motivated from activities that's happening down there.
Okay, thank you. And we'll leave the best for last, the lady of the house.
We actually have our startup community on WhatsApp. It's called Fintech Founders, and Mo Salah from Startup Grind is on that community, and he's always active with us. So anything that is happening on your side, he pushes on the WhatsApp group. We have a lot of CEOs and a lot of fintech founders and active participants. Whenever there's a hackathon or a challenge or a panel or an opportunity to work with a bank or a regulator, we're always communicating on that WhatsApp. So I'm more than happy to add you to this, and we've done a lot of things together. So more than happy. I think Hisham from my team, he heads fintech engagement. Hala, I'll put his email address. You can get in touch with him, and we'll do that. Hala, on a more practical level, putting on the side, all the schmoozing and networking. I'm open for ideas. Anything that you think we can do to help support, I'm already saying on board. So whatever you suggest, whatever you need, we can do, definitely.
Amazing. And with that, I want to open the floor to anyone who has some questions. So in the chat window, please ask your questions, and then this is your opportunity to say a few words. But we'll have Nada; she'll make the call on who can speak. But while you guys are asking your questions in the chat, I did have one quick question for the audience. Where are you all from? Roll call. Where are you messaging from?
I live in Dubai. I've been living here for 15 years now. But I'm originally Lebanese, and I moved to Dubai after the 2006 war. I actually lost my house. So I was displaced, and financial inclusion was one of the things that I wanted to solve for the region. So yeah.
Amazing.
Talk about myself. I am from Saudi Arabia, being born and raised in Saudi Arabia, but was in the western part, which was Jeddah. I moved to the eastern province almost in 2007, 2008. Took up my degree down there, did start the business, and for the last 5 years now I'm here in Riyadh, but still in Saudi Arabia, and hopefully to expand our business to more geographical location, hopefully soon.
Yeah, for me, I'm sending my greetings from Cairo, Egypt. Born and raised here, and also my business is here in Cairo.
Amazing. And the people who joined as well, share in the chat window where you're from as well, just so we know where you're all from. I don't see a lot of questions here, but someone said, let me scroll up. What is your passion to be an entrepreneur? What are you passionate about? Why did you become an entrepreneur? I guess that's the question. Well, Chicago. So yeah, the question is why, what is your passion?
Okay, so I'll start with this. Our passion from our side to ensure to digitize the financial markets. And again, I know when I say digitize, it's not only having an application. No, what I see, it's an integration between multiple platforms that helps you in user experience. So our passion to enforce and ensure the integration of financial solution to digitize them.
Amazing. Amazing. Okay, cool. There's a question that says, any advice to start a digital wallet business? Anyone?
If you're talking about Egypt, I think digital wallet hype is on the peak right now. The regulator and a lot of people in the banking industry think it's a great tool for financial inclusion. My take would be is that you will have to find a clear differentiation, because a lot of people and all people in Egypt are talking about mobile wallets and how it's effective and how it's a solution to a problem. Me myself, I haven't found a solid use case now to utilize the digital wallets infrastructure, and I think this is an interesting area for anyone who wants to come and innovate in the digital wallets.
Interesting. I got a question. They said, what do you think about Bitcoin? Now, a lot of you may not know this, but I'm an Amazon best-selling author, probably the only one in the region on emerging technology. So I have a book called I Don't Trust You, but Blockchain and Bitcoin Will Help. But again, the only best-selling author when it comes to emerging technology. So I like to answer this question, but I
maybe
want to
you
ask
can
you
answer
guys.
the question.
I'd love to get you guys' thoughts first.
No.
Mine is more matter of fact. No, mine is more matter of fact. I want everyone else's opinion, and I'll give you guys my facts.
Let's start with the facts.
Facts are men lie, women lie, numbers don't. The numbers don't. You look at it from a year-over-year perspective, Bitcoin will continue to increase. And the only reason why is because Bitcoin is finite. It's limited in quantity, right? And so as long as one new person, again, keyword is one new person per month, per year, per day wants some Bitcoin, that means the demand will continue to increase, like compound interest will continue to increase. But the scarcity of it, right, will become even more scarce because it'd be limited. It'd be more and more limited. Just like I call it the law of value in my book. So what makes something valuable has three characteristics. One, has to be unique. Two, has to have scarcity. And three, a demand. Everything in this world follows that rule, except for one thing: traditional money, traditional currency. That's a whole, if you want to go into that, that's a whole nother session. But the point I'm making is traditional money is the only thing that's made valuable by government decree. So the government says it's valuable, whatever country you're in. But it's also based on the borders. Each country has its borders. But as we become more and more digitally dependent, right? Meaning we're all connected to the internet. That means our currencies will have to work across multiple borders because we live and work on the World Wide Web. So going back to my point, Bitcoin is not currency. It's not money. Think of it as digital gold. Just like in the physical world, we have gold. In the digital world, we have gold as well. It's just the digital version of it. And so therefore, just like in gold, in its earlier days, remember, Bitcoin is only 12 years old. So in its earlier days, you could always, and even to now, you still see people using gold as a store of value. And that's what Bitcoin is. It's a store of value. So again, recap, it's limited, therefore it's scarce. And also as their adoption increases, meaning more and more people have just a little bit, the demand of it increases, the scarcity still remains the same or less, therefore value goes up. So by default, it will continue to increase. I'm finished.
Well, from my point of view, it has two perspectives.
Sure.
First perspective, from investment point of view, as you stated, Damu, it is a new type of asset class.
For sure.
We used to know the real estate. We used to know stocks. Now startups. So now Bitcoins. It's a new alternative investments that has its ups and downs. It has, as you stated, all the features for any investments. It has a great return of investment if you took a short, if you if you play on it on a short to mid short time investments, that's from investment point of view. From an economical point of view, as my point of view, it's a new medium of exchange. It's not a currency, as you stated. It's a medium of exchange. It will help me out to take off a lot of vendors in between each parties. For example, I want to buy this item. The other item could be US dollars, could be beef, could be a car, could be a real estate. So it's a medium of exchange. And the only difference between when I say medium of exchange and a currency usually, as you stated, the more it's approved by a country, a medium of exchange is approved by the people itself, by human.
Right.
Because we believed at certain ages that gold and silver, it's a medium exchange. So I'll give you this coin, this golden coin for uh, three bananas. So now what's happening is the same with the Bitcoin. I'll give you half a Bitcoin for this car.
Yeah, and again, this last piece of it, a Bitcoin is broken up into smaller units called Satoshis. So Satoshis are like little units that, kind of like if you have the dirham, you have the fills, all of the fills, 100 fills equals one dirham, right? Same thing in the dollars, 100 pennies equals $1. Same thing in Bitcoin. You have like 100 million Satoshis equals one BTC, one Bitcoin. But I digress. Again, if you want to talk fact about Bitcoin, I can talk about it for a while. But let's move on to the questions. So the questions that we have here is, do you have quality time for your personal and your professional life as an entrepreneur?
Well, when you set up your own company based on your own passion, it's all the same, right? Quality time, professional becomes personal. You develop with the company, and even your family becomes part of the company. So my kids, they talk Fintech Galaxy all the time. My team, their kids keep sending me videos that I'm working with Fintech Galaxy and I'm doing this and that, the little kids. So it's hard to segregate between actually the work and you stop thinking about work, you just live it,
Interesting. Okay. Someone said, why do you think funding isn't a big deal for early stage startups? It's so hard to bootstrap here in the US because living is so expensive. If you put a lot of hours into your startup, you need another source of income. Can I start? And then
have they tried living in Dubai?
Well, it depends on where you live at. If you're in San Francisco, New York, then you understand Dubai for sure.
Speaking
but outside of that, you're okay. But I'm obviously going to let the panelists answer this. But I think the point that the panelists were saying earlier isn't the fact that you don't need a source of income. That's not the case. I think what they were saying earlier is that when you're going for funding, you have to have a clear path or be really clear as to why you're going to take someone else's money and what you're going to do with someone else's money, right? Whereas if you have a business that you've launched, product market fit is about, ultimately having a product that people want to buy. So in the beginning, as every entrepreneur goes to this, regardless if you're Fintech Galaxy or not, which is amazing, is that you have this period, or in the beginning, when you're doing a lot of push, meaning you're pushing your product on other people. Product market fit is when you have pull, meaning people are pulling for your service, kind of like where Fintech Galaxy is now. They have 300 APIs or something like this. People are pulling your APIs, right? That means you have a fit in the market. If people are not asking for your product, then you don't have a fit. And when people are pulling for your product, that means they're oftentimes willing to pay for it. Now, your willingness to pay could be very, very small units, or the next part of it becomes who is going to be the person that's going to pay for that pool that you're giving away. But again, I apologize.
Let me actually respond to this and add to what you just said. Fundraising is an art. It's not a science. And you as an entrepreneur and a founder, you would know when is the good time to fundraise and how much and why. Don't go fundraising prematurely, and don't fundraise more than what you really need. Because every dollar you raise, if you delay it by a day, it will be more valuable. So your company is getting more valuable. I don't know if Hussein or Khalid I think Hussein spoke about get your first client, get your first prototype, and then go to market. And honestly, when I set up the company, I did a fundraising, and I raised $400,000 as I mentioned, and I wanted to do fundraising early on, but then I thought, okay, hold on, let me just get my first client, and then I got the first client, and then I said, okay, let me actually make more money so that I have a better story to tell, and then so I started delaying a month after month and a quarter after quarter, and the more I delayed, the more I suffered. You know why? Because you know about the valley of death, and those 18 months after you go live, those 18 months are the toughest, because you're number one, you're downscaling your lifestyle. So for someone like me who was, ahead of a business, getting paid loads of money, I go and downgrade my lifestyle. So I'm getting paid a fraction of what I was getting paid. I'm using my savings. I'm no longer, flying around and traveling to places and having my vacations in the Maldives. I'm just going to rack. So when you start downgrading, at some point you're like, when am I going to live again? Like, really? And the easiest thing you do is you go raise $1 million and you pay yourself again another $20,000 a month, and you're happily ever after, which is actually the worst thing you do. So I'm not saying don't do fundraising. We are going to the market with fundraising plans next month, but we're doing it after hitting milestones that we put on ourselves. So we said we have to reach this number of clients, this maturity of a product, this level of revenues. And when I told investors like the angels that in year 3 we're going to break even and we're going to go positive, everybody said 2020 is going to ruin your plans. And actually 2020 with COVID was made it actually a reality. Everything that we ever wanted gets so much expedited with COVID, and we managed to hit our numbers. So just raise when you need to, only what you need to raise.
Agreed. I'm sorry, can I just get one last quick question from the audience, and then let's go ahead and, we've had a great session. So the last question, is I'll make it 2. And so one of you guys take it, and the other one do the other question. So the first question is, what do you think about an MBA, and do you pretty much need it to run a business? That's one of you guys. And then the other question is, do you think that the startup ecosystem in the MENA region has matured in the last few years, especially as regards to fundraising, or do we still have a long way to go? And that's the last question of the night.
I would like to take the first question about the Masters of Business Administration. I'm a big fan of the concept that any knowledge is beneficial to the startup founder and to entrepreneur. Academic or life experience, as I like to believe, entrepreneur come with his or her luggage into the startup life. So everything counts. However, I think it's not mandatory. Maybe it's academically speaking, it's designed for more established corporates, more into family business. However, I think every knowledge counts. On the second question, if I want to add something about, we have matured a lot the ecosystem in the MENA region in terms of number of exits, number of startups per head count, the number of investments, the type of investors that are coming in the region. I think it's following a trend that all the big capitals worldwide in US and Europe are looking more into not crowded market and emerging market. So they have the Middle East and Africa in the heart of their consideration. I think it will mature over time. However, we still have a long time to go because it's an ongoing process.
That's totally true. That's what I was gonna add. So to just put your answer, Hussein, on a bracket. No, I don't think MENA ecosystem for startups is mature. No, it's not mature. It's not even close to mature. From my experience, if I compare the MENA region with Europe, for example, or US market, so we are way from maturity. I will touch multiple aspects. First of all, the legal aspects, the formation of a company itself. Where do you form it? The number of, for example, the free zones today we have available in the region. It's there very. It's very small compared to what's available out there. Two, as you stated, the number of exits. The number of exits, literally, I can count them on my fingers here on the MENA region, comparing to what's available there. And one huge item I think it's missing, having a startup going IPO. So because if I follow what happens in the capital market down there in US, a lot of the startups, a lot of big hits, big names, after being on the market after 5 to 7 years, they go to IPO to raise more funds and to exit some of their current investors. So what I see the status on the MENA region, it's growing fast. I mean, let's assume that the maturity ecosystem should by rules and regulation takes 10 years, and our side we're gonna take 5 years because we're learning a lot. Government is moving a lot of entrepreneurs is being done, running businesses in very systematic way to mature. So we are gonna reach maturity very soon, but at the meantime, no, we are not mature at all.
I'm gonna leave the lady to go last. Mirna, what would you like to say last to kind of end today's session?
I'm just going to comment on the MBA question because this is actually very close to my heart. I do believe in executive MBAs and I do encourage them. I actually did my executive MBA, and during that 2 years, I launched Fintech Galaxy. And it was actually an idea that came out of the strategy course, the strategy module. And while I was studying, I was implementing. So we would go and do study HR, and I would build my org structure. We would go corporate governance, and I would activate my corporate governance. And even though I was reporting on financial statements for 10 years, like, analyzing balance sheets and trying to figure out, where banks are hiding their write-offs and write-downs and all the things. When I studied it from a preparer's perspective, like when you study it as someone who's your own company CFO, you learn a lot. I do encourage anyone who is capable and who's able to do an executive MBA, just do it. It's an amazing, amazing experience, and it teaches you a lot.
Way to go. And with that being said, everyone, I want to first say thank you so very much for your amazing, precious time. And thank you for being honest and truthful and just really trying to inspire the people that joined this call. And with that being said, thank you so much for your time. Have a wonderful evening. Thank you.
Thank you very much.
Thank you for arranging Startup Grind. Thank you.
All the best. And please keep in touch because we have another event next month in February, which is going to be, I think, on culture, tourism, and the MENA, something like this. But all the best. We'll be in touch. Thank you all. Good night.
Thank you.
Tourism in the world of COVID. Looking forward. Thank you.
All the best.